Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. If you've been tracking the cryptocurrency charts this week, well, you know the atmosphere is heavy. Red September is continuing its relentless run.
Yeah, it really is.
It's September 29th, 2025, today, and investor confidence feels, incredibly fragile. It seems caught between significant global geopolitical drama and these major financial outflows we're seeing.
Yeah, that fragility is pretty central to what we want to unpack today. Our mission really is to connect the dots between this current market pain, the very real threat of an imminent U.S. government shutdown.
Which is looming.
Exactly. And also the aggressive regulatory and institutional moves happening right now, across Europe, Asia, and the Middle East. It's kind of a moment of profound conflict where local politics are having these big global crypto consequences.
We should probably acknowledge two major background factors that are coloring this environment, at least according to the sources we looked at. First, there's maybe a flicker of historical optimism. October 2025 coincides with 18 months post-Bitcoin halving. Historically, that timeline has often preceded new all-time highs. So you've got this historical hope kind of fighting immediate dread.
And second, you really can't ignore the geopolitical backdrop that's influencing that current dread. We're watching President Trump's ongoing, and let's be honest, very complicated attempts to broker peace between Israel and Palestine and Russia and Ukraine.
High-stakes stuff.
Absolutely. These efforts add a massive layer of political instability. And the sources we reviewed specifically cite the unfortunate assassination of Charlie Cowis earlier this month as another factor. That event significantly compounds the level of unpredictable risk investors have to price in, contributing directly to that fragile sentiment you mentioned.
Okay, so let's unpack this immediate financial pressure then in Section 1. It's been more than just rough. It feels like a flight to safety, almost.
It does.
The global cryptocurrency market cap is sitting well below that $4 trillion mark. It's clocking in at $3.91 trillion right now.
Yeah, struggling to hold that level.
And the market's heavy reliance on Ethereum also shows the pain. Its market cap alone dropped from around, what was it, $580 billion just 2 weeks ago.
That's right.
Down to $488 billion today. That's nearly a $100 billion drop, just gone.
And that immediate pressure is, well, it's screaming loudest in the institutional products. We saw massive ETF outflows. The total was $666.7 million in the last 24 hours alone.
Wow. That figure is shocking. Just to put that $666.7 million in context,
Yeah.
how does that compare to, say, the average weekly outflow we've seen recently?
Oh, it's a huge spike, a really significant jump. Bitcoin took the lion's share of the hit there, accounting for $418.3 million in ETF outflows.
Okay.
And Ethereum ETFs contributed the remaining $248.4 million. These figures, they aren't just retail fear, they signal real institutional caution. Large players deciding the political and regulatory risk is just too high right now.
But the caution doesn't stop with cash exiting ETFs, right?
Yeah.
We also have to look at the futures market. The open interest, or OI, that's the total amount of money locked in derivatives contracts, that's fallen by 0.11%. Can you explain why that specific metric, especially combined with falling prices, is so uniquely bearish right now?
Yeah, what's really interesting here is the precise meaning when you see both price and OI drop together. It signifies that the price decline is mainly being driven by traders closing out their losing long positions.
Oh, okay.
So they're liquidating their bets that the price would go up. When they close a long, they effectively sell, which creates immediate downward selling pressure. This action also reduces the overall leverage in the system, sort of cutting the fuel needed for a big, explosive upward move.
Right, less fuel for the fire. And we saw the impact of that leverage flush just yesterday.
We did, exactly. We saw approximately $26 billion in Bitcoin futures liquidated in the last 24 hours, according to Coin Analysis.
$26 billion.
Yeah, that is a truly substantial amount of capital wiped out, basically instantly. Now, while liquidations can often be seen as maybe necessary to flesh out weak hands, $26 billion being cleared this quickly, especially coupled with those massive institutional outflows we mentioned, it suggests something deeper than just a minor correction. It suggests maybe structural fear has taken hold.
Okay, so we have traders closing bets, institutional investors fleeing UTFs, and now we hit this ultimate political uncertainty brewing in the U.S. Tomorrow, September 30th, is the deadline for federal funding.
Crunching.
If Congress doesn't pass a continuing resolution by midnight, we risk a U.S. government shutdown.
And this political deadlock is really driving that domestic uncertainty. Republicans control both chambers and the White House, but they still need Democratic support for funding. The sources we've seen indicate the accusation coming from the administration is that Democrats are, well, holding funding hostage purely to score political points, kind of ignoring the real-world operational consequences.
And those consequences could be immediate. While essential services like military pay, air traffic control, those continue, many crucial federal departments would see massive disruption, right? Like the Education Department, EPA, FDA, NIH, the IRS, USDA. Even some Social Security claims processing could stall.
Right. And if this shutdown actually happens, the crypto world could see 4 specific consequences. First, and maybe most damagingly, regulatory delays.
Wow.
Key crypto legislation, things like market structure bills or SEC FTC rulemaking, that would likely stall as congressional committees halt non-essential operations. Any momentum towards clear regulations, maybe for exchanges or institutional guidance, it's immediately lost.
And considering the longest U.S. government shutdown lasted 35 days,
Yeah.
those back between December 2018 and January 2019, 35 days, is like an eternity in the crypto space.
Absolutely.
Imagine the amount of institutional product development and regulatory clarity that could be delayed by that kind of legislative freeze.
And that feeds directly into the second consequence, market uncertainty and volatility. Political deadlock generally increases uncertainty. That makes sense. But here's where we hit a fascinating contradiction,
How so?
Well, if Bitcoin is supposed to be this hedge against fiat instability, why are we seeing massive institutional outflows right now, just when the U.S. government is threatening to, well, shut down?
Yeah, that contradicts the original narrative, doesn't it? Is it because institutional investors fundamentally treat crypto as a high-risk asset first and only secondarily as maybe a potential hedge?
The sources we looked at suggest precisely that. Short-term political deadlock definitely increases volatility. And yes, historically, you might see some retail investors drive a short-term price spike around the deadline, treating Bitcoin as that instability hedge.
Okay.
But the institutional behavior right now is clearly signaling risk-off, which leads us to the third and fourth points.
Right, which are?
Third, the federal agency slowdown. Agencies like the SEC and the Treasury, they may halt non-essential operations. That means delaying new approvals, audits, perhaps even enforcement actions.
Okay.
And fourth, investor sentiment just turns cautious, which could mean delaying those big corporate treasury purchases of Bitcoin again, linking right back to those massive ETF outflows we started with.
So the retail narrative might be buy the government instability, but the institutional action is more like wait for clear air before deploying more capital.
That seems to be the message, yes.
Okay, let's shift our gaze globally then, because while the U.S. is grappling with these self-inflicted political wounds and potential gridlock, the rest of the world seems to be moving pretty fast to challenge U.S. digital asset dominance.
Yeah, this is where we see a really concerted regulatory race for sovereignty kicking off. Take the European Union. 9 major European banks, including giants like ING, UniCredit, Danske Bank, they've formed a consortium to launch a euro-denominated stablecoin.
And this isn't just a commercial launch. It sounds like a strategic move, backed by pretty robust regulation.
Absolutely. It's very strategic. This stablecoin will operate entirely under the EU's comprehensive MiCAR regulations. It'll be supervised directly by the Dutch central bank, and they're aiming for a rollout in the second half of 2026.
And the goal?
The explicit strategic goal is to reduce Europe's reliance on U.S. dollar-backed digital currencies. They want to provide their own trusted, low-cost, programmable payment system, especially for things like cross-border settlements. This is a direct challenge to the dollar's digital hegemony.
Interesting. And we're seeing similar urgency in Asia. You mentioned South Korea.
Yes, South Korea is rushing to establish sovereignty too. Their Democratic Party launched a digital asset task force specifically to pass comprehensive crypto and stablecoin laws by the end of this year.
What's driving that urgency there?
Their motivation seems quite alarming, actually. In just Q1 of 2025 alone, $40.6 billion in digital assets, and a significant chunk of that was stablecoins, were virtually transferred abroad.
Wow, $40 billion outflow.
Yeah, that kind of capital outflow is seen as a genuine threat to their monetary stability. So South Korea's plan includes introducing a one-back stablecoin policy. It's explicitly designed to counter U.S. dollar peg rivals and safeguard their local monetary sovereignty.
Okay, so Europe and Asia are building their own rails.
Mm.
Meanwhile, U.S. regulators seem busy on their own front. The SEC and FINRA have reportedly reached out to over 200 firms about unusual trading activity ahead of digital asset treasury announcements.
That's right.
Sounds like a massive insider trading sweep.
It certainly looks like it. This appears to be a huge review focused on the trading of material non-public information, or MNPI.
MNPF.
The regulatory concern seems to be this. Are people or entities buying stock, or maybe more likely derivatives tied to a company's stock, before that company publicly announces it's buying, say, hundreds of millions in Bitcoin for its treasury?
Because that advanced knowledge could create massive unfair trading advantages.
Exactly. And our sources indicate that firms known for their big corporate crypto strategies, including names like MicroStrategy, have reportedly been flagged in this broad review.
The stakes are incredibly high there. Yet despite that intense scrutiny, institutional interest in actually tracking these corporate crypto strategies continues, doesn't it?
It does. Kind of a paradox. GSR, which is a currency firm dating back to 2013, they've just filed with the SEC to launch an ETF. And this ETF is specifically focused on tracking companies that hold crypto treasuries.
So regulators are flagging potential insider trading related to these strategies on one side. And on the other, traditional finance is creating products specifically to give investors access to those very strategies.
Precisely. It's a fascinating tension.
Now, let's maybe look away from the regulatory complexity for a moment and focus on some specific innovation coming out of the Middle East. You highlighted Saudi Arabia and Abu Dhabi, 2 huge forward-looking projects that seem connected. Let's start with Saudi Arabia and the tech firm, HUMAIN.
Right. HUMAIN, which is backed by the Saudi Public Investment Fund, recently launched the Horizon Pro laptop. Now, this device is apparently built entirely around generative AI and, get this, claims performance up to 100 times faster than human thought.
Wow. Okay, that is a bold performance claim.
It is indeed. And crucially, it runs a locally integrated Arabic-first large language model called ELM. So it's prioritizing local capabilities, performance, and importantly, control. This project really signals a strategic investment in foundational technology, building the digital tools needed for enterprise users within the region.
Okay, so cutting-edge AI tech there,
Yeah.
and you're pairing that with a massive move in crypto infrastructure coming out of Abu Dhabi.
Correct. The Pulsar Group is a lead investor in a $300 million capital raise for Soulmate. Soulmate is a newly launched Solana-based digital asset treasury.
Yeah.
And Soulmate's plan includes deploying a bare metal validator service directly in Abu Dhabi. This move effectively establishes the region's first major Solana infrastructure hub.
So, help us connect the dots. Why pair a cutting-edge AI laptop development with major crypto infrastructure investment? What's the link?
This is really the synthesis point for this section. It shows the region is investing in the full stack of a digital economy. They aren't just focused on the finance layer, the Solana hub.
Right.
They're also focused on the foundational technology, the AI, the Web3 elements needed to run a digital economy more independently of existing US-based technological or financial rails. They seem to be building the infrastructure and the application layer simultaneously.
That puts a really sharp point on the central philosophical question raised by our sources in the final segment. Who do you trust? When you look at something like those euro-backed stablecoins issued by 9 major European banks under MiCAR,
Yes, Bill.
do you trust them more than, say, the established US dollar-backed rivals?
Well, the analysis we reviewed leans pretty heavily towards favoring the bank-issued euro stablecoins, or maybe even circles USDC, which provides those transparent real-time audit reports.
Yeah.
And that preference seems to be over Tether's USDT, largely due to USDT's continued lack of a complete, fully verifiable audit report. The core issue really boils down to accountability and transparency.
But the fundamental critique of all centralized stablecoins still remains, doesn't it? Regardless of who issues them.
Absolutely. The source material points this out very clearly. Bitcoin was created, in theory, to eliminate the middle person, right? But stablecoins are inherently centralized entities. They force the user to make a choice.
A choice between.
Do you trust a consortium of regulated banks under a framework like MiCAR? Or do you trust a maybe less transparent central issuer, potentially with opaque reserves? In the current landscape, the preference seems to be shifting towards highly regulated entities that offer transparent audits.
And the only truly pure solution, theoretically, remains the algorithmic path, despite its troubled past.
In principle, yes. The sources do acknowledge the, let's call it, philosophical preference for algorithmic stablecoins as the only potentially pure peer-to-peer solution. But obviously, there's massive regulatory backlash and, frankly, fear following the whole Terra Luna collapse.
Understandable.
So that fundamental tension between centralization for perceived safety and regulation versus decentralization for true peer-to-peer commerce, it remains completely unresolved.
Okay, so to sort of synthesize what we've covered in this deep dive, the crypto market right now seems defined by these profoundly conflicting forces. You've got political paralysis in the U.S. threatening to stall regulatory progress, coupled with major institutional investment and competitive regulatory structures flowing globally, particularly in Europe and Asia, plus this fierce race for stablecoin sovereignty.
Exactly. And the core takeaway for you, the listener, is really this growing divergence in regulatory environments. The U.S. is, at the moment, becoming a source of gridlock and regulatory uncertainty, potentially a real headwind. Meanwhile, other major jurisdictions like the EU, the Middle East, they're actively creating clearer, localized digital asset frameworks designed specifically to attract capital and innovation.
Which raises a crucial, maybe provocative question for the industry's future, doesn't it?
Yeah.
Given that regulatory progress stalls dramatically during political gridlock, like a potential U.S. shutdown, will this increased domestic uncertainty in the U.S. push more institutional focus toward those non-U.S. jurisdictions? Towards the EU, South Korea, the Middle East, places that are actively creating clearer frameworks.
That's the big question.
And in doing so, could we see an acceleration of the global shift, away from reliance on U.S. regulatory decisions or timelines?
It's definitely possible. If the pace of innovation in places like Europe and the Middle East continues to outstrip the pace of U.S. legislative and regulatory action, then that decision, where institutional capital ultimately decides to call home, may very well determine the global center of gravity for digital assets in the next few years.
A truly fascinating tension and a critical point to watch. Thanks for diving deep with us today.